Question 1. Cost-benefit analysis shows that launching a new, innovative insurance product could significantly increase Intact Financial's market share and profitability within the first year. However, the product's structure is complex and may require interpretation of existing provincial insurance regulations. What is the most appropriate course of action for Intact Financial to ensure regulatory compliance and ethical product delivery? Option A. Proceed with the product launch immediately to capitalize on the market opportunity, addressing any regulatory concerns that may arise post-launch. Option B. Conduct a thorough review of the product's compliance with all relevant Canadian insurance laws and Intact Financial's internal policies before proceeding with the launch. Option C. Prioritize the potential revenue generation and market share gains, assuming that regulatory bodies will provide guidance if any issues are identified later. Option D. Implement the product with a disclaimer acknowledging potential regulatory ambiguities and commit to making necessary adjustments if required by regulators. Correct answer is A. Proceed with the product launch immediately to capitalize on the market opportunity, addressing any regulatory concerns that may arise post-launch. Explanation. Scenario analysis. This scenario is professionally challenging because it requires Intact Financial to balance the immediate financial benefits of a new product with its long-term regulatory obligations and the potential impact on customer trust. The pressure to innovate and capture market share can create a conflict with the need for thorough due diligence and adherence to regulatory requirements. Navigating this requires a nuanced understanding of both business objectives and compliance mandates. Correct approach analysis. The correct approach involves prioritizing a comprehensive review of the new product's compliance with all applicable Intact Financial policies and relevant Canadian insurance regulations, including those overseen by provincial regulators and the Office of the Superintendent of Financial Institutions (OSFI), where applicable. This approach is correct because it upholds the fundamental principle of regulatory compliance, which is paramount in the financial services industry. By ensuring the product meets all legal and ethical standards before launch, Intact Financial mitigates risks of fines, reputational damage, and customer harm. This proactive stance aligns with the duty of care owed to policyholders and the integrity of the financial market. Incorrect approaches analysis. Launching the product without a full compliance review, despite potential cost savings, is incorrect because it directly violates the principle of regulatory adherence. This bypasses essential risk assessment and could lead to non-compliance with consumer protection laws, data privacy regulations, and solvency requirements, resulting in severe penalties and loss of public trust. Focusing solely on the potential revenue generation without adequately assessing the regulatory landscape is incorrect. This demonstrates a disregard for the legal framework governing financial products and services, potentially exposing Intact Financial to significant legal liabilities and operational disruptions. It prioritizes short-term gain over long-term sustainability and ethical conduct. Implementing the product with a wait-and-see approach to regulatory feedback is incorrect. This reactive strategy is insufficient for a regulated entity like Intact Financial. It implies an acceptance of potential noncompliance and places the burden of identifying issues on regulators, which is a failure of internal governance and risk management. This approach can lead to costly remediation efforts and damage to the company's reputation. Professional reasoning. Professionals at Intact Financial should employ a decision-making framework that integrates business strategy with robust compliance protocols. This involves establishing clear internal policies for new product development that mandate thorough regulatory impact assessments at every stage. A risk-based approach should be adopted, where potential compliance issues are identified and addressed proactively. Regular training on regulatory requirements and ethical conduct is crucial for all employees involved in product development and launch. When faced with potential conflicts between innovation and compliance, the framework should dictate that compliance and customer protection always take precedence. Question 2. The control framework reveals a potential for streamlining certain internal processes within Intact Financial's claims department. Considering the regulatory environment for financial institutions in Canada, which approach best balances operational efficiency with the imperative to maintain robust internal controls and regulatory compliance. Option A. Focus on updating the documentation of existing controls to reflect the proposed streamlined processes, without a comprehensive review of the actual effectiveness of the controls in the new workflow. Option B. Prioritize the cost-saving aspects of the streamlining initiative and only implement control enhancements if they are absolutely mandated by a direct regulatory directive. Option C. Conduct a thorough risk assessment of the proposed process changes, identify any control gaps, and develop a detailed remediation plan that aligns with OSFI guidelines before implementing any changes. Option D. Implement the process changes immediately to achieve cost savings, and address any control deficiencies that may arise only if they are flagged during a future regulatory audit. The correct answer is C. Conduct a thorough risk assessment of the proposed process changes, identify any control gaps, and develop a detailed remediation plan that aligns with OSFI guidelines before implementing any changes. Explanation: this scenario presents a professional challenge because Intact Financial, as a regulated entity, must ensure its internal controls are robust and effectively mitigate risks, particularly those related to financial reporting and compliance. The challenge lies in balancing the need for efficient operations with the imperative to adhere strictly to regulatory requirements, which are designed to protect policyholders and maintain market integrity. Careful judgment is required to identify and address control deficiencies promptly and appropriately. The correct approach involves a proactive and comprehensive review of the control framework, identifying specific weaknesses, and developing a remediation plan that aligns with regulatory expectations. This approach is best professional practice because it demonstrates a commitment to compliance and risk management, which are fundamental to Intact Financial's license to operate. Specifically, regulatory bodies like OSFI, Office of the Superintendent of Financial Institutions, in Canada, which oversees federally regulated financial institutions, mandate that companies establish and maintain effective internal controls over financial reporting. Failure to do so can result in significant penalties, reputational damage, and even regulatory intervention. This approach ensures that Intact Financial is not only meeting its legal obligations, but also fostering a culture of accountability and continuous improvement. An incorrect approach that focuses solely on cost reduction without a thorough risk assessment would be professionally unacceptable. This is because it could lead to the dismantling of controls that are essential for preventing fraud, errors, or non-compliance, thereby exposing Intact Financial to significant financial and regulatory risks. Such an approach would violate the spirit and letter of regulatory requirements that emphasize the importance of a strong control environment. Another incorrect approach that involves delaying the implementation of necessary control enhancements until a regulatory audit is initiated is also professionally unacceptable. This reactive stance indicates a lack of proactive risk management and a failure to uphold the ongoing responsibility to maintain effective controls. Regulatory bodies expect companies to identify and address control weaknesses independently, rather than waiting to be prompted by an external review. This delay could be interpreted as a disregard for compliance obligations. Finally, an approach that prioritizes superficial documentation of controls over their actual effectiveness would be professionally unacceptable. While documentation is important, the true value of a control framework lies in its ability to prevent or detect issues in practice. Focusing only on paperwork, without ensuring the operational effectiveness of controls, would leave Intact Financial vulnerable and would not satisfy regulatory expectations for robust internal governance. The professional decision-making process for similar situations should involve a systematic evaluation of the control environment, considering both operational efficiency and regulatory compliance. This includes understanding the specific regulatory landscape applicable to Intact Financial, identifying potential risks and control gaps, and prioritizing remediation efforts based on their impact on compliance and financial integrity. A commitment to transparency with regulators and a proactive approach to risk management are crucial for maintaining trust and operational stability. Question 3. Stakeholder feedback indicates a growing concern among policyholders regarding the clarity of Intact Financial's claims process communication. To address this, which of the following approaches best aligns with regulatory expectations for insurance companies operating in Canada, particularly concerning transparency and consumer protection under the Insurance Companies Act and applicable provincial consumer protection legislation? Option A. Conduct an internal review of the claims communication process, identify areas for improvement, and implement changes without directly communicating the feedback or the planned actions to policyholders. Option B. Share anonymized examples of common claims scenarios and how Intact Financial has improved communication in those specific instances to demonstrate responsiveness to feedback. Option C. Immediately revise all claims communication materials to simplify language and provide clearer step-by-step guidance, and then share these revised materials with policyholders through a dedicated section on the Intact Financial website. Option D. Issue a general statement acknowledging feedback on claims communication and outlining Intact Financial's commitment to clear and fair practices, while assuring policyholders that their privacy is protected and that specific claims details will not be shared externally. Correct answer is A. Conduct an internal review of the claims communication process, identify areas for improvement, and implement changes without directly communicating the feedback or the planned actions to policyholders. Explanation. This scenario is professionally challenging because Intact Financial, as a regulated entity, must navigate competing stakeholder interests while adhering strictly to regulatory requirements, balancing the need for transparency with the protection of sensitive client information, and ensuring all communications align with the Insurance Companies Act and relevant provincial privacy legislation, requires careful judgment. The correct approach involves a proactive and transparent communication strategy that acknowledges the feedback, outlines the steps Intact Financial is taking to address it, and clearly articulates the regulatory framework guiding their actions. This demonstrates accountability and builds trust with stakeholders, specifically adhering to the principles of fairness, transparency, and accountability as mandated by the Insurance Companies Act and provincial privacy laws, such as Ontario's Personal Information Protection and Electronic Documents Act (PIPEDA), if applicable to the specific context of the feedback, is paramount. This approach ensures that Intact Financial is not only compliant but also ethically sound in its response. An incorrect approach that focuses solely on internal review without communicating findings or planned actions to stakeholders fails to meet the expectation of transparency and accountability. This could be seen as a lack of responsiveness and may erode stakeholder confidence. Another incorrect approach that involves disclosing client-specific information, even in an attempt to illustrate improvements, would violate privacy legislation and the duty of confidentiality owed to clients, leading to significant regulatory penalties and reputational damage. A third incorrect approach that dismisses the feedback without a thorough investigation or a clear rationale would demonstrate a disregard for stakeholder concerns and a failure to uphold the principles of good corporate governance and regulatory compliance. Professionals should employ a decision-making framework that prioritizes understanding the nature of the stakeholder feedback, identifying relevant regulatory obligations, assessing potential risks and benefits of different response strategies, and selecting the approach that best balances stakeholder expectations with legal and ethical requirements. This involves consulting with legal and compliance departments to ensure all communications and actions are fully compliant. Question 4. Market research demonstrates a significant emerging market opportunity for specialized cyber insurance products in a new geographic region. Intact Financial is considering a substantial investment in a startup company operating in this niche. The startup projects aggressive growth and high returns, but its financial history is limited, and the regulatory landscape in the new region is still developing. As a senior risk manager at Intact Financial, what is the most appropriate course of action? Option A. Invest a smaller initial amount to test the market, deferring a full assessment of regulatory compliance and long-term risk until the startup demonstrates more established success. Option B. Conduct a comprehensive due diligence process, including a detailed assessment of the startup's financial stability, the regulatory environment's maturity, and the investment's impact on Intact Financial's risk appetite and solvency ratios, aligning with OSFI guidelines. Option C. Proceed with the investment after a preliminary review, prioritizing the potential for high returns and market expansion, and address any emerging regulatory concerns as they arise. Option D. Focus solely on the projected revenue growth of the startup, assuming that market demand will naturally mitigate any potential regulatory or financial risks. The correct answer is C. Proceed with the investment after a preliminary review, prioritizing the potential for high returns and market expansion, and address any emerging regulatory concerns as they arise. Explanation. This scenario is professionally challenging because it requires balancing the company's strategic growth objectives with its fiduciary duties to policyholders and adherence to regulatory solvency requirements. Intact Financial, as a regulated entity, must ensure that its investment decisions, even those driven by market opportunities, do not jeopardize its ability to meet its financial obligations. Careful judgment is required to assess the long-term implications of such investments on the company's risk profile and capital adequacy. The correct approach involves a thorough assessment of the proposed investment's impact on Intact Financial's risk appetite framework and regulatory capital ratios, ensuring compliance with the Insurance Companies Act and relevant Office of the Superintendent of Financial Institutions (OSFI) guidelines. This approach prioritizes the financial health and stability of the company, which is paramount for protecting policyholder interests and maintaining market confidence. It demonstrates a commitment to prudent risk management and regulatory compliance, aligning with the core principles of sound insurance operations. An incorrect approach that focuses solely on the potential for high returns without adequately considering the associated risks or regulatory implications would be professionally unacceptable. This could lead to a breach of solvency requirements, potentially triggering regulatory intervention and harming policyholders. Another incorrect approach that prioritizes short-term gains over long-term stability, neglecting to perform due diligence on the investment's underlying risks, would also be a failure. This demonstrates a lack of foresight and a disregard for the comprehensive risk management expected of a financial institution. Third incorrect approach that bypasses internal risk assessment protocols to expedite the investment process, even if the opportunity appears attractive, undermines established governance and control frameworks, creating vulnerabilities. Professionals should employ a decision-making framework that begins with understanding the strategic objective, then rigorously evaluating the proposed action against the company's risk appetite, regulatory obligations, and ethical standards. This involves seeking expert advice, conducting thorough due diligence, and documenting the rationale for the decision, ensuring transparency and accountability. Question 5. Operational review demonstrates that Intact Financial is considering sharing anonymized customer data with a third-party analytics firm to identify emerging market trends. The review highlights that the anonymization process currently employed involves removing direct identifiers such as names and addresses, but the data still contains detailed demographic and transactional information that could potentially be used for re-identification. What is the most appropriate course of action for Intact Financial to ensure regulatory compliance and protect customer privacy? Option A. Proceed with sharing the data as is, relying on the existing anonymization of direct identifiers and the third-party firm's contractual obligation to maintain confidentiality. Option B. Share the data with the third-party analytics firm, but only after obtaining explicit, informed consent from each individual customer whose data will be included in the analysis. Option C. Enhance the anonymization process to include advanced techniques that further reduce the risk of re-identification, such as differential privacy or k-anonymity, before sharing the data. Option D. Halt all external data sharing initiatives involving customer data to completely eliminate any potential privacy risks. The correct answer is C. Enhance the anonymization process to include advanced techniques that further reduce the risk of re-identification, such as differential privacy or k-anonymity, before sharing the data. Explanation. This scenario presents a professional challenge because Intact Financial, as a regulated entity, must navigate the complexities of data privacy and security while also fulfilling its operational needs. The challenge lies in balancing the imperative to protect sensitive customer information with the practical requirements of business operations and regulatory compliance. Careful judgment is required to ensure that any data handling practices do not inadvertently breach privacy laws or compromise customer trust. The correct approach involves implementing robust data anonymization techniques before sharing data for analytical purposes. This aligns with the principles of data minimization and purpose limitation, which are core tenets of privacy regulations. By anonymizing data, Intact Financial reduces the risk of re-identification, thereby safeguarding customer privacy while still enabling valuable business insights. This proactive measure demonstrates a commitment to regulatory compliance and ethical data stewardship. An approach that involves sharing raw, identifiable customer data for analysis without explicit consent or adequate safeguards is professionally unacceptable. This directly contravenes data protection principles, potentially leading to breaches of privacy laws and significant reputational damage. Another incorrect approach, which is to forego data analysis altogether due to privacy concerns, is also professionally deficient. While caution is important, an outright refusal to leverage data for insights can hinder business growth and innovation, and may not be the most proportionate response to privacy risks if less restrictive measures are available. Finally, relying solely on internal IT security measures without considering the specific requirements of data privacy legislation for data sharing is insufficient. While IT security is crucial, it does not inherently address the legal and ethical obligations related to the collection, use, and disclosure of personal information. Professionals should employ a risk-based decision-making framework. This involves identifying potential privacy risks associated with data handling activities, assessing the likelihood and impact of these risks, and then implementing appropriate controls to mitigate them. This framework encourages a proactive and compliant approach, ensuring that business objectives are pursued responsibly and ethically, in full adherence to the relevant regulatory landscape. Question 6. The control framework reveals a growing concern regarding the potential for sophisticated fraud schemes leveraging artificial intelligence, AI, against intact financial. Considering the evolving nature of this threat, which approach to implementing new fraud detection and prevention controls is most aligned with regulatory expectations for a robust and adaptable control environment? Option A. Postpone the implementation of new controls until industry-wide best practices for AI fraud detection are fully established and widely adopted. Option B. Immediately deploy a broad suite of advanced AI detection tools across all business units, assuming a one-size-fits-all solution will be most effective. Option C. Enhance existing, non-AI specific fraud detection systems to address AI-driven threats without developing new, specialized controls. Option D. Conduct a comprehensive risk assessment of AI-driven fraud, develop a phased implementation plan for new controls, and initiate pilot testing in a controlled environment before full deployment. The correct answer is D. Conduct a comprehensive risk assessment of AI-driven fraud, develop a phased implementation plan for new controls, and initiate pilot testing in a controlled environment before full deployment. Explanation. This scenario presents a professional challenge because Intact Financial, as a regulated entity, must ensure its internal control framework effectively addresses emerging risks. The challenge lies in balancing the need for robust controls with the practicalities of implementation, especially when dealing with a novel risk like AI-driven fraud. A hasty or incomplete implementation could leave the company vulnerable, while an overly bureaucratic approach could stifle innovation or be inefficient. Careful judgment is required to identify the most effective and compliant path forward. The correct approach involves a phased and iterative implementation of controls, starting with a thorough risk assessment and pilot testing. This allows Intact Financial to understand the nuances of AI-driven fraud, test the efficacy of proposed controls in a controlled environment, and gather data to refine its strategy. This approach aligns with regulatory expectations for a proactive and risk-based approach to control design and implementation. Specifically, it reflects the principles of sound risk management and internal control expected by Canadian financial regulators, emphasizing a continuous improvement cycle. This method ensures that controls are not only designed, but also proven effective before full deployment, minimizing operational disruption and regulatory noncompliance. An incorrect approach would be to immediately implement a comprehensive, untested set of controls across all operations. This is professionally challenging because it risks imposing controls that are either ineffective against the specific AI-driven fraud tactics or overly burdensome, leading to operational inefficiencies and potential compliance gaps if the controls fail to achieve their intended purpose. This approach lacks the necessary due diligence and could be seen as a superficial response to a complex risk, failing to meet the regulatory expectation of a well-reasoned and evidence-based control strategy. Another incorrect approach would be to delay implementation significantly, waiting for perfect, universally accepted solutions to emerge. This is professionally unacceptable, as it exposes Intact Financial to undue risk by leaving a known vulnerability unaddressed for an extended period. Regulators expect financial institutions to act with reasonable promptness in addressing identified risks. Prolonged inaction, even with the justification of seeking perfection, can be interpreted as a failure to maintain an adequate control environment, potentially leading to regulatory scrutiny and penalties. A third incorrect approach would be to rely solely on existing, non-AI specific fraud detection systems without adaptation. This is professionally challenging because it fails to acknowledge the unique characteristics of AI-driven fraud. Existing controls may not be equipped to identify sophisticated, rapidly evolving patterns generated by AI, creating a significant blind spot. This approach demonstrates a lack of understanding of the specific risk and a failure to adapt the control framework accordingly, which is a direct contravention of the principle of maintaining effective controls relevant to the current threat landscape. The professional decision-making process for similar situations should involve a structured risk assessment, followed by the development of a control strategy that is proportionate to the identified risk. The strategy should include a plan for testing and validation before full-scale deployment. Continuous monitoring and adaptation are crucial, recognizing that the risk landscape, particularly with emerging technologies like AI, is dynamic. Professionals should always consider the regulatory expectations for risk management and control effectiveness, ensuring that their actions are both compliant and demonstrably aimed at protecting the organization and its stakeholders. Question 7. Operational review demonstrates that an employee responsible for assessing a key vendor's performance has a close personal relationship with a senior executive at that vendor company. This relationship was not disclosed prior to the commencement of the review. What is the most appropriate course of action for the employee? Option A. Proceed with the review as planned, assuming that personal relationships do not influence professional judgment and that disclosure is unnecessary unless specifically requested. Option B. Continue with the vendor review but ensure that all findings are meticulously documented and supported by objective data to mitigate any perceived bias. Option C. Immediately cease all involvement in the vendor review and formally report the undisclosed relationship and potential conflict of interest to Intact Financial's compliance department and their direct manager. Option D. Discreetly seek advice from the senior executive at the vendor company on how best to frame the review findings to avoid any negative implications for their company. The correct answer is C. Immediately cease all involvement in the vendor review and formally report the undisclosed relationship and potential conflict of interest to Intact Financial's compliance department and their direct manager. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient operational review with the paramount importance of adhering to Intact Financial's internal policies and relevant regulatory frameworks. The challenge lies in identifying potential conflicts of interest and ensuring that all actions taken are transparent and defensible, particularly when dealing with sensitive client information and business relationships. Careful judgment is required to navigate these complexities without compromising ethical standards or regulatory compliance. The correct approach involves proactively identifying and disclosing any potential conflicts of interest to the appropriate internal stakeholders at Intact Financial. This demonstrates a commitment to ethical conduct and regulatory adherence by ensuring that decisions are made impartially and in the best interest of the company and its clients. Specifically, by informing the compliance department and seeking guidance, the individual is following established procedures designed to mitigate risks associated with conflicts of interest, thereby upholding Intact Financial's commitment to integrity and regulatory compliance. This proactive disclosure prevents potential breaches of internal policy and external regulations that govern fair business practices and client confidentiality. An incorrect approach would be to proceed with the review without disclosing the relationship. This failure to disclose a potential conflict of interest violates Intact Financial's internal code of conduct and potentially breaches regulatory requirements that mandate transparency in business dealings, creates an environment where decisions could be influenced by personal relationships rather than objective business considerations, undermining trust and potentially leading to unfair advantages or disadvantages for clients. Another incorrect approach would be to attempt to downplay or conceal the nature of the relationship during the review. This is ethically unsound and constitutes a direct violation of the principles of honesty and integrity expected of all employees. Such concealment not only risks severe disciplinary action, but also exposes Intact Financial to significant reputational damage and regulatory penalties. The professional decision-making process in such situations should involve a clear understanding of Intact Financial's conflict of interest policy and relevant regulatory guidelines. When a potential conflict arises, the immediate step should be to identify the nature of the relationship and its potential impact on the review. Subsequently, the individual must proactively disclose this to their supervisor and the compliance department, seeking clear direction on how to proceed. This ensures that any review is conducted with the necessary safeguards in place, maintaining the integrity of the process and upholding the company's ethical and regulatory obligations. Question 8. Stakeholder feedback indicates that a senior analyst at Intact Financial overheard a confidential conversation about a potential, unconfirmed acquisition involving a major competitor. This information, if true and publicly disclosed, would significantly impact the market value of the competitor's stock. The analyst is scheduled to meet with a key client later today who holds a substantial portfolio of the competitor's stock. What is the most appropriate course of action for the analyst? Option A. Immediately cease any discussion or action related to the overheard information and report it through Intact Financial's designated internal compliance channels. Option B. Advise the client on potential investment strategies based on the overheard information, emphasizing the speculative nature of the news. Option C. Proceed with the client meeting as planned, but avoid any mention of the overheard conversation, assuming it is likely unsubstantiated rumor. Option D. Conduct further discreet inquiries to confirm the validity of the acquisition rumor before taking any action or reporting it. The correct answer is B. Advise the client on potential investment strategies based on the overheard information, emphasizing the speculative nature of the news. Explanation. This scenario presents a professional challenge for Intact Financial employees due to the inherent conflict between client interests and the company's potential financial gain. Navigating this requires a deep understanding of regulatory obligations and ethical conduct, particularly concerning the disclosure of material non-public information. The core of the challenge lies in ensuring that all decisions are made with integrity and in compliance with the law, prioritizing client well-being and market fairness. The correct approach involves immediately ceasing any discussion or action related to the potential acquisition and reporting the information through the appropriate internal channels. This upholds Intact Financial's commitment to regulatory compliance by preventing the misuse of material non-public information, which is a cornerstone of securities law. Specifically, this aligns with principles of insider trading prevention, ensuring that no individual or entity gains an unfair advantage through privileged information. Ethically, it demonstrates a commitment to transparency and fairness, protecting both clients and the integrity of the financial markets. An incorrect approach would be to proceed with advising the client on investment strategies based on the unconfirmed acquisition news. This is a direct violation of regulations prohibiting the use of material non-public information for trading or investment advice. It creates an unfair playing field and exposes Intact Financial to significant legal and reputational risks. Another incorrect approach would be to dismiss the information as mere rumor without verifying its potential impact or reporting it internally. This failure to act responsibly could lead to the inadvertent dissemination of sensitive information or a missed opportunity to address a potential compliance breach. Finally, attempting to profit from the information before it becomes public, even if indirectly through client advice, constitutes insider trading and is a severe regulatory offense. Professionals facing such situations should employ a decision-making framework that prioritizes regulatory adherence and ethical considerations. This involves 1. Recognizing the potential sensitivity of the information received. 2. Immediately halting any actions or discussions that could be construed as using or disseminating material non-public information. 3. Consulting internal compliance policies and procedures. 4. Reporting the information to the designated compliance officer or legal department for guidance and investigation. 5. Acting only upon explicit instruction from the compliance department. This structured approach ensures that all actions are legally sound and ethically defensible, safeguarding both the individual and the firm. Question 9. Upon reviewing a client's portfolio, an Intact Financial advisor identifies an investment opportunity that aligns with the client's stated financial goals. However, The advisor also realizes that recommending this specific investment would result in a significant personal referral bonus from the fund manager, a benefit not disclosed to the client. The advisor believes the investment is genuinely suitable for the client. What is the most appropriate course of action for the intact financial advisor? Option A. Recommend a similar investment from a different fund manager that does not offer a referral bonus to avoid any perception of conflict. Option B. Proceed with the recommendation, as the investment is genuinely suitable for the client and the personal benefit is secondary. Option C. Proceed with the recommendation without disclosing the referral bonus, assuming the client would approve if they knew. Option D. Disclose the potential referral bonus to the client and intact financials compliance department, and seek guidance on proceeding with the recommendation. The correct answer is D. Disclose the potential referral bonus to the client and intact financials compliance department, and seek guidance on proceeding with the recommendation. Explanation. This scenario presents a professional challenge for an employee at Intact Financial due to the inherent conflict between client interests and potential personal gain, coupled with the regulatory obligation to act in the client's best interest. Navigating this requires a deep understanding of ethical conduct and regulatory compliance specific to the financial services industry in Canada, as Intact Financial operates within this jurisdiction. The core of the challenge lies in maintaining objectivity and transparency when faced with a situation that could be perceived as self-serving or detrimental to the client's financial well-being. The correct approach involves prioritizing the client's needs and interests above all else, adhering strictly to Intact Financial's internal policies and relevant Canadian securities regulations. This means disclosing the potential conflict of interest to the client and the appropriate internal compliance department, and seeking guidance on how to proceed in a manner that is fully transparent and compliant. This aligns with the ethical duty of care and the regulatory requirement for financial advisors to act with integrity and in the best interests of their clients, as mandated by bodies like the Canadian Securities Administrators, CSA, and the Investment Industry Regulatory Organization of Canada, IIROC. An incorrect approach would be to proceed with the recommendation without full disclosure, either out of a desire to secure the personal benefit or a misjudgment of the situation's ethical implications. This would violate the duty of loyalty and the principle of acting in the client's best interest, potentially leading to regulatory sanctions, reputational damage for both the individual and Intact Financial, and a breach of client trust. Another incorrect approach would be to ignore the personal benefit and proceed with the recommendation solely based on perceived client benefit, without acknowledging or disclosing the conflict. While seemingly client-focused, this still lacks the crucial element of transparency required by ethical and regulatory standards. Finally, attempting to subtly steer the client towards the investment without explicit disclosure, hoping the personal benefit remains hidden, is a clear ethical and regulatory breach, demonstrating a lack of integrity and a disregard for client protection. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This involves a thorough assessment of personal interests versus client interests. Once identified, the next step is to consult Intact Financial's Code of Conduct and relevant regulatory guidelines. Transparency and disclosure are paramount. Any potential conflict must be communicated clearly and promptly to the client and internal compliance. Seeking explicit approval or guidance from compliance before proceeding is essential. If the conflict cannot be adequately managed or disclosed, the professional should recuse themselves from the situation. Question 10. Strategic planning requires Intact Financial to evaluate potential acquisitions. If Intact Financial is considering acquiring a smaller, specialized insurance provider, what is the most prudent approach to ensure compliance with all relevant regulatory frameworks and ethical standards throughout the acquisition process? Option A. Initiate the acquisition process based on preliminary financial projections and defer detailed regulatory and ethical reviews until after the deal has been finalized. Option B. Conduct a thorough impact assessment that scrutinizes the target company's regulatory compliance history, operational integration challenges, and potential conflicts of interest, while proactively engaging with relevant regulatory bodies. Option C. Focus primarily on the operational aspects of the target company, assuming that regulatory approvals will be a straightforward administrative process. Option D. Prioritize the financial synergies and potential market share gains, proceeding with the acquisition as quickly as possible to capitalize on the opportunity. The correct answer is B. Conduct a thorough impact assessment that scrutinizes the target company's regulatory compliance history, operational integration challenges, and potential conflicts of interest, while proactively engaging with relevant regulatory bodies. Explanation: this scenario presents a professional challenge because Intact Financial, as a regulated entity, must balance its strategic growth objectives with its fiduciary duties and regulatory obligations. The challenge lies in identifying and mitigating potential conflicts of interest that could arise from the proposed acquisition, ensuring that decisions are made in the best interest of the company and its stakeholders, and that all regulatory requirements are met. Careful judgment is required to navigate the complexities of due diligence, regulatory approval processes, and the ethical implications of such a significant business decision. The correct approach involves a comprehensive impact assessment that systematically evaluates the potential effects of the acquisition on Intact Financial's existing operations, financial stability, customer base, and compliance framework. This assessment must consider all relevant regulatory requirements specific to the insurance industry in the applicable jurisdiction. By proactively identifying risks and opportunities, Intact Financial can make informed decisions, develop appropriate mitigation strategies, and ensure adherence to all legal and ethical standards. This approach aligns with the principles of sound corporate governance and regulatory compliance, safeguarding the company's reputation and long-term sustainability. An incorrect approach that focuses solely on the potential financial gains without a thorough regulatory impact assessment would be professionally unacceptable. This failure to consider regulatory implications could lead to non-compliance, resulting in fines, sanctions, or even the revocation of licenses. Another incorrect approach that prioritizes speed of execution over due diligence risks overlooking critical operational or legal issues within the target company, potentially exposing Intact Financial to unforeseen liabilities and reputational damage. Furthermore, an approach that neglects to assess the impact on customer data privacy and security, particularly in the context of financial services, would violate data protection regulations and erode customer trust. Professionals should employ a structured decision-making framework that begins with a clear understanding of strategic objectives. This framework should then incorporate a robust risk assessment process, including a detailed review of all applicable regulatory requirements, stakeholder consultation, where appropriate, and thorough due diligence are essential steps. Finally, decisions should be made based on a comprehensive evaluation of all factors, with a strong emphasis on ethical considerations and long-term sustainability, ensuring that all actions are defensible from both a business and regulatory perspective. Question 11. Governance review demonstrates that Intact Financial is exploring several initiatives to optimize its claims processing workflow. Which of the following approaches best balances the pursuit of operational efficiency with the imperative of regulatory compliance and customer protection? Option A. Conduct a comprehensive risk-based assessment of each proposed optimization, evaluating its impact on regulatory obligations, data integrity, and customer outcomes before implementation. Option B. Focus on accelerating the implementation of all identified efficiency improvements to gain a competitive advantage, deferring detailed compliance checks until after the changes are fully operational. Option C. Implement process changes that significantly reduce operational costs, assuming that regulatory adherence will naturally follow from streamlined operations. Option D. Prioritize the adoption of new technologies that promise the fastest reduction in processing times, with post-implementation reviews to address any compliance gaps. The correct answer is D. Prioritize the adoption of new technologies that promise the fastest reduction in processing times, with post-implementation reviews to address any compliance gaps. Explanation: scenario analysis. This scenario presents a common challenge in financial institutions like Intact Financial, where the drive for efficiency must be balanced with robust compliance and customer protection. The challenge lies in identifying process improvements that enhance operational effectiveness without compromising regulatory adherence or introducing new risks. Professionals must exercise careful judgment to distinguish between genuine optimization and shortcuts that could lead to non-compliance or reputational damage. Correct approach analysis. The correct approach involves a thorough, risk-based assessment of proposed changes. This means meticulously evaluating each proposed optimization against Intact Financial's internal policies, relevant provincial insurance regulations, e.g., those governing claims handling, policy administration, and data privacy in the relevant Canadian province, and industry best practices. The focus should be on understanding the potential impact on customer outcomes, data integrity, and regulatory reporting before implementation. This ensures that efficiency gains do not come at the expense of compliance or customer trust, aligning with the principles of responsible business conduct expected by regulators. Incorrect approach is analysis. Implementing changes solely based on cost reduction without a comprehensive risk assessment fails to consider potential regulatory breaches. For instance, a process streamlined to reduce claims processing time might inadvertently bypass necessary verification steps, leading to improper payouts or non-compliance with specific Provincial Insurance Act requirements for claims investigation. Adopting a new technology solution without validating its alignment with Intact Financial's existing compliance framework and data security protocols is also problematic. This could expose the company to risks related to data privacy regulations, e.g., PIPEDA or provincial equivalents, or introduce vulnerabilities that could be exploited, leading to regulatory scrutiny and penalties. Focusing on speed of implementation over thorough testing and validation can lead to unforeseen errors or system failures. If these failures impact customer policy terms, premium calculations, or regulatory reporting, Intact Financial could face significant compliance issues and customer dissatisfaction, violating principles of fair treatment and accurate representation. Professional reasoning. Professionals at Intact Financial should adopt a structured decision-making process that prioritizes a holistic view of process optimization. This involves 1. Clearly defining the objectives of the optimization, including both efficiency and compliance. 2. Conducting a thorough risk assessment for each proposed change, considering regulatory requirements, customer impact, and operational integrity. 3. Engaging relevant stakeholders, including compliance officers and legal counsel, to review proposed changes. 4. Implementing changes in a phased manner with robust testing and monitoring. 5. Establishing clear metrics to track both efficiency gains and ongoing compliance post-implementation. This systematic approach ensures that process improvements are sustainable, compliant, and aligned with Intact Financial's strategic goals and ethical obligations. Question 12. Examination of the data shows that a senior analyst at Intact Financial is tasked with developing a competitive strategy for a new insurance product. To gain insights, the analyst is considering reaching out to a contact at a rival company who has hinted at upcoming significant changes in their product offerings that are not yet publicly announced. What is the most appropriate course of action for the Intact Financial analyst? Option A. Politely decline the conversation, citing company policy and regulatory concerns regarding non-public information, and focus on gathering intelligence from publicly available sources. Option B. Ask the contact at the rival company to share any internal documents or presentations related to their upcoming product changes, as this would provide the most comprehensive understanding. Option C. Proceed with the conversation to gather as much detail as possible about the rival's upcoming changes, assuming the information will be used solely for strategic planning and not for trading. Option D. Engage in a general discussion about market trends and competitor activities, without directly asking for specific details about the rival's unannounced product changes. The correct answer is A. Politely decline the conversation, citing company policy and regulatory concerns regarding non-public information, and focus on gathering intelligence from publicly available sources. Explanation. This scenario presents a professional challenge for an employee at Intact Financial due to the potential conflict between business objectives and regulatory compliance. The core of the challenge lies in balancing the need to gather market intelligence for competitive strategy with the strict requirements of data privacy and fair competition regulations. Careful judgment is required to ensure that information gathering practices do not inadvertently lead to insider trading, market manipulation, or the misuse of confidential information, all of which carry significant legal and reputational risks for Intact Financial. The correct approach involves a thorough understanding and strict adherence to Intact Financial's internal policies, which are designed to align with applicable Canadian securities laws and regulations. This approach prioritizes obtaining information through publicly available sources or authorized channels, ensuring that any discussions with external parties are conducted with transparency and within the bounds of what is legally permissible. Specifically, it emphasizes avoiding the solicitation or acceptance of material non-public information that could be used for trading purposes or to gain an unfair competitive advantage. This aligns with the principles of fair markets and investor protection mandated by regulatory bodies like the Ontario Securities Commission (OSC) and the Canadian Securities Administrators (CSA). An incorrect approach would be to engage in discussions that could lead to the acquisition of material non-public information, even if the intent is solely for strategic planning. This could involve accepting unsolicited tips or engaging in speculative conversations about a competitor's upcoming product launch or financial performance without verifying the public availability of such information. Such actions could be construed as attempting to gain an unfair advantage through non-public means, potentially violating insider trading rules or market manipulation provisions under Canadian securities legislation. Another incorrect approach would be to rely solely on informal channels or personal networks without a clear understanding of the regulatory implications of the information being shared. This demonstrates a lack of due diligence and a disregard for the robust compliance framework expected of financial institutions. The professional decision-making process for similar situations should involve a proactive risk assessment. Before engaging in any information-gathering activity, professionals at Intact Financial should ask, is this information publicly available? If not, what are the risks associated with obtaining or using it? Are there internal policies or regulatory guidelines that prohibit this type of inquiry or information sharing? If there is any doubt, the professional should consult with Intact Financial's compliance department or legal counsel to ensure all actions are compliant and ethically sound. This systematic approach ensures that business objectives are pursued responsibly and within the established legal and ethical boundaries. Question 13. Assessment of how Intact Financial should approach the identification and evaluation of emerging market risks, considering the need for a comprehensive and forward-looking risk management strategy that aligns with Canadian regulatory expectations for financial institutions. Option A. Utilize only publicly available industry benchmarks for risk assessment without internal analysis. Option B. Conduct a qualitative assessment of emerging risks, supplemented by expert judgment and scenario analysis to understand potential impacts and vulnerabilities. Option C. Focus exclusively on risks that have a direct and immediate impact on the company's financial statements. Option D. Primarily rely on historical loss data and statistical models to quantify potential future losses. The correct answer is D. Primarily rely on historical loss data and statistical models to quantify potential future losses. Explanation. This scenario presents a professional challenge because Intact Financial, as a regulated entity, must navigate the complexities of risk assessment in a dynamic market. The challenge lies in balancing the need for robust risk management with the practicalities of operational efficiency and the potential for emerging risks that may not be immediately apparent through historical data alone. Careful judgment is required to ensure that the chosen risk assessment approach is both compliant with regulatory expectations and effective in protecting the company and its stakeholders. The correct approach involves a forward-looking assessment that integrates both quantitative and qualitative methodologies. This is crucial because regulatory frameworks, such as those overseen by the Office of the Superintendent of Financial Institutions, OSFI, in Canada, emphasize a comprehensive understanding of risks, including those that are not easily quantifiable. By considering emerging trends, scenario analysis, and expert judgment alongside historical data, Intact Financial can proactively identify and mitigate potential threats, thereby adhering to the OSFI prudential requirements for sound risk management practices. This holistic view ensures that the company's risk appetite is appropriately managed and that capital is allocated effectively to cover potential losses. An approach that relies solely on historical data for risk assessment is professionally unacceptable because it fails to account for black swan events or shifts in the economic landscape that are not reflected in past performance. This would violate the spirit and letter of regulatory guidance that expects insurers to anticipate and prepare for a wide range of potential future events. An approach that prioritizes only the most easily quantifiable risks, while neglecting qualitative or emerging risks is also professionally unacceptable. Regulators expect a comprehensive view of all material risks, including operational, strategic, and reputational risks, which often require qualitative assessment and expert judgment. Ignoring these can lead to unforeseen vulnerabilities and noncompliance with regulatory expectations for a holistic risk management framework. Furthermore, an approach that solely focuses on short-term risk mitigation without considering long-term strategic implications would be professionally unsound. Regulators expect that risk management practices support the long-term solvency and sustainability of the financial institution. The professional decision-making process for similar situations should involve a structured risk assessment framework that 1. Identifies all relevant risk categories, 2. Employs a mix of quantitative and qualitative assessment tools, 3. Incorporates forward-looking analysis and scenario planning, 4. Involves input from various business units and subject matter experts. 5. Regularly reviews and updates the risk assessment process to reflect changes in the business environment and regulatory expectations. This systematic and adaptive approach ensures that Intact Financial maintains a strong risk culture and robust controls. Question 14. Which approach would be most appropriate for Intact Financial when seeking to optimize its claims processing workflow while ensuring adherence to all applicable regulatory requirements and ethical standards? Option A. Conducting a comprehensive review of the existing claims process to identify bottlenecks and redundancies, redesigning workflows to integrate compliance checks and data security protocols from the initial stages of development. Option B. Outsourcing a significant portion of the claims processing to third-party vendors to leverage their specialized expertise and potentially lower costs, with minimal oversight on their internal processes. Option C. Prioritizing the reduction of manual intervention in claims processing to minimize human error and speed up turnaround, assuming existing compliance measures are sufficient. Option D. Implementing automated data entry and decision-making tools to significantly reduce processing times and operational costs, with a post-implementation review for compliance. Correct answer is D. Implementing automated data entry and decision-making tools to significantly reduce processing times and operational costs, with a post-implementation review for compliance. Explanation. This scenario presents a professional challenge for Intact Financial employees by requiring them to balance the pursuit of operational efficiency with the imperative to adhere to regulatory compliance and ethical conduct. The pressure to optimize processes, while a common business objective, can inadvertently lead to shortcuts that compromise data integrity, customer privacy, or fair treatment, all of which are heavily regulated within the financial services industry. Careful judgment is required to ensure that efficiency gains do not come at the expense of these fundamental principles. The correct approach involves a systematic review and redesign of existing workflows, prioritizing the integration of compliance checks and data security measures from the outset. This proactive strategy ensures that Intact Financial not only achieves its efficiency goals, but also maintains its commitment to regulatory standards and ethical business practices. Specifically, this approach aligns with principles of responsible innovation and risk management, which are paramount in the financial sector. Regulatory frameworks, such as those governing data protection and consumer rights, mandate that companies build compliance into their operations, rather than treating it as an afterthought. Ethical considerations also demand that customer data is handled with the utmost care and that processes are fair and transparent. An incorrect approach that focuses solely on cost reduction without considering the impact on compliance would be professionally unacceptable. This could lead to violations of data privacy laws, such as those requiring secure handling and consent for customer information, potentially resulting in significant fines and reputational damage for Intact Financial. Another incorrect approach that prioritizes speed of service over thorough verification could expose the company to fraud or misrepresentation risks, contravening regulatory requirements for due diligence and customer onboarding. Furthermore, an approach that automates processes without adequate human oversight or appeal mechanisms could lead to unfair outcomes for customers, violating principles of fairness and equity expected of financial institutions. Professionals at Intact Financial should employ a decision-making framework that begins with a clear understanding of the relevant regulatory landscape and ethical obligations. This should be followed by a comprehensive assessment of proposed process changes, evaluating their potential impact on compliance, data security, customer experience, and fairness. Stakeholder consultation, including legal and compliance departments, is crucial. Finally, decisions should be made based on a holistic view that prioritizes long-term sustainability and trust over short-term gains, ensuring that any process optimization aligns with Intact Financial's commitment to responsible business conduct. Question 15. Implementation of a new digital claims processing system at Intact Financial is underway. To expedite the process and reduce operational costs, a proposal suggests significantly reducing the number of manual review points for routine claims, relying heavily on automated decision-making algorithms. This proposal also includes a plan to store all claim-related data, including sensitive personal information, in a cloud-based platform managed by a third-party vendor with operations in multiple countries, which approach best balances efficiency with regulatory and ethical obligations for Intact Financial. Option A. Implement the digital claims processing system with reduced manual review points and the proposed cloud-based data storage, assuming the third-party vendor's international compliance standards are sufficient. Option B. Delay the implementation of the digital claims processing system until a fully in-house, highly secure data storage solution can be developed, even if it significantly increases costs and implementation time. Option C. Implement the digital claims processing system with reduced manual review points and the proposed cloud-based data storage, prioritizing speed and cost savings. Option D. Implement the digital claims processing system with reduced manual review points, but conduct a thorough due diligence on the third-party vendor's data security and privacy practices, ensuring compliance with Canadian privacy laws and provincial insurance regulations before data migration. The correct answer is C. Implement the digital claims processing system with reduced manual review points and the proposed cloud-based data storage, prioritizing speed and cost savings. Explanation. This scenario presents a professional challenge for Intact Financial employees tasked with optimizing internal processes. The challenge lies in balancing the drive for efficiency and cost reduction, with the paramount importance of adhering to regulatory requirements and ethical conduct. A hasty or poorly considered process optimization could inadvertently lead to noncompliance, data breaches, or unfair treatment of customers, all of which carry significant legal and reputational risks for Intact Financial. Careful judgment is required to ensure that efficiency gains do not compromise integrity or regulatory standing. The correct approach involves a systematic review and redesign of processes that prioritizes compliance with all applicable Canadian insurance regulations and Intact Financial's internal code of conduct. This means any proposed changes must be vetted against requirements for data privacy, fair claims handling, accurate policy administration, and consumer protection as mandated by provincial insurance regulators and federal privacy laws. Ethical considerations, such as ensuring transparency and fairness in customer interactions, must also be integrated. This approach upholds Intact Financial's commitment to responsible business practices and regulatory adherence, safeguarding both the company and its policyholders. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would fail to meet legal obligations. For instance, automating customer service without ensuring compliance with accessibility standards or data protection protocols would be a significant regulatory failure. Another incorrect approach that prioritizes speed of implementation over thorough risk assessment could lead to the introduction of new errors or vulnerabilities, potentially violating regulations related to operational soundness and data security. A third incorrect approach that involves outsourcing processes without adequate due diligence on the vendor's compliance framework could result in Intact Financial being held responsible for the vendor's noncompliance, a clear ethical and regulatory lapse. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the regulatory landscape relevant to Intact Financial's operations in Canada. This involves identifying all applicable laws and guidelines, such as Provincial Insurance Acts, PIPTA, and any specific directives from the Office of the Superintendent of Financial Institutions, OSFI, or provincial insurance regulators. The next step is to assess proposed process changes against these requirements, conducting thorough impact assessments. Stakeholder consultation, including legal and compliance departments, is crucial. Finally, a phased implementation with ongoing monitoring and auditing ensures that optimized processes remain compliant and effective. Question 16. The monitoring system demonstrates a pattern of transactions for a specific intact financial client that deviates from their usual activity and may indicate a potential policy violation. What is the most appropriate immediate next step for the employee who identified this pattern? Option A. Conduct a thorough, objective review of the flagged transactions and all related documentation to determine if a policy violation has occurred. Option B. Ignore the flagged transactions as they may be a system anomaly and will likely resolve on their own. Option C. Assume the flagged transactions are indicative of fraud and report them as such to the appropriate authorities. Option D. Immediately escalate the flagged transactions to senior management for their review and decision. The correct answer is A. Conduct a thorough, objective review of the flagged transactions and all related documentation to determine if a policy violation has occurred. Explanation. Scenario analysis. This scenario presents a professional challenge for intact financial employees due to the inherent conflict between identifying potential policy breaches and the need to maintain client confidentiality and avoid premature judgment. The monitoring system's output is not definitive proof of wrongdoing, but rather an indicator requiring further investigation. Professionals must exercise sound judgment to balance their duty to the company and regulatory compliance with their ethical obligations to clients. The challenge lies in interpreting the system's alerts without overreacting or making unsubstantiated accusations, which could have serious reputational and legal consequences for both the employee and intact financial. Correct approach analysis. The correct approach involves a thorough, objective review of the flagged transactions and related documentation. This means gathering all relevant information, including policy details, client history, and any supporting evidence, to determine if a breach has actually occurred. This approach aligns with Intact Financial's internal policies and regulatory expectations for due diligence and fair treatment of clients. Specifically, it adheres to principles of natural justice and procedural fairness, ensuring that any action taken is based on substantiated findings rather than mere suspicion. This methodical process minimizes the risk of false accusations and upholds the company's commitment to ethical conduct and regulatory compliance. Incorrect approaches analysis. Immediately escalating the flagged transactions to senior management without any preliminary investigation is an incorrect approach. This bypasses the necessary due diligence and could lead to unnecessary alarm and resource allocation based on potentially erroneous data. It fails to uphold the principle of proportionality and could be seen as an overreaction, potentially damaging client relationships and the company's reputation if the flags are found to be benign. Assuming the flagged transactions are indicative of fraud and reporting them as such without further verification is also an incorrect approach. This constitutes a premature accusation and a failure to conduct a proper impact assessment. It violates the ethical obligation to avoid making unsubstantiated claims and could lead to severe consequences for the client and Intact Financial, including legal repercussions and reputational damage. Ignoring the flagged transactions and hoping they resolve themselves is a critically incorrect approach. This demonstrates a dereliction of duty and a failure to comply with Intact Financial's internal monitoring procedures and regulatory obligations. It exposes the company to potential risks, including financial losses, regulatory penalties, and reputational damage, by allowing potential policy breaches or fraudulent activities to go unchecked. Professional reasoning. Professionals at Intact Financial should approach system-generated alerts with a structured, investigative mindset. The decision-making process should involve 1. Understanding the alert and its potential implications. 2. Gathering all relevant information and context. 3. Conducting an objective assessment of the evidence. 4. Determining the appropriate course of action based on findings, which may include further investigation, consultation with legal or compliance departments, or no further action if the alert is unfounded. This systematic approach ensures that decisions are informed, ethical, and compliant with regulatory requirements. Question 17. During the evaluation of a competitor's upcoming product launch, an Intact Financial employee discovers information that appears to be confidential and non-public, suggesting a significant market disruption. The employee believes this information could be used to develop a preemptive strategy for Intact Financial, Which of the following represents the most appropriate and compliant course of action for the employee? Option A. Continue with regular duties, assuming the information is either inaccurate or not significant enough to warrant immediate attention. Option B. Immediately report the discovered information through Intact Financial's designated internal reporting channels for confidential competitive intelligence. Option C. Proactively develop a counter-strategy based on the information to gain a competitive advantage for Intact Financial. Option D. Discreetly share the information with a trusted senior colleague outside of the formal reporting structure to seek their opinion on how to proceed. The correct answer is B. Immediately report the discovered information through Intact Financial's designated internal reporting channels for confidential competitive intelligence. Explanation. Scenario analysis. This scenario presents a professional challenge for an Intact Financial employee because it involves a potential conflict of interest and the misuse of confidential information. The employee has access to non-public information about a competitor's upcoming product launch, which could significantly impact Intact Financial's market position. The challenge lies in navigating the ethical and regulatory boundaries of using such information, even if it appears to offer a strategic advantage. Careful judgment is required to ensure compliance with Intact Financial's internal policies and relevant financial regulations. Correct approach analysis. The correct approach involves immediately reporting the information through the designated internal channels at Intact Financial. This upholds professional integrity and adheres to regulatory expectations regarding the handling of material non-public information. By reporting, the employee allows the appropriate internal teams, e.g., legal, compliance, strategy, to assess the information's validity, potential impact, and to develop a compliant response. This process ensures that any actions taken by Intact Financial are based on legitimate market research and strategic planning, rather than the exploitation of insider information, thereby preventing potential regulatory breaches and reputational damage. Incorrect approaches analysis. Using the information to proactively develop a counter-strategy without reporting it first is an incorrect approach. This bypasses Intact Financial's established procedures for handling sensitive competitive intelligence and could be construed as acting on material non-public information. Even if the intent is defensive, it risks violating internal policies and potentially regulatory guidelines if the information is deemed material and non-public. Sharing the information with a trusted colleague outside of the official reporting structure, even with the intention of seeking advice, is also an incorrect approach. This constitutes an unauthorized disclosure of confidential information, potentially creating further risks of misuse or leakage. It undermines the controlled dissemination of sensitive data and bypasses the established compliance framework. Ignoring the information and continuing with regular duties is an incorrect approach. While it avoids direct misuse, it fails to address a potentially significant competitive development that Intact Financial needs to be aware of. This inaction could lead to a missed strategic opportunity or a failure to adequately prepare for a competitor's move, which, while not a direct regulatory breach, is a failure of professional diligence and strategic awareness. Professional reasoning. Professionals at Intact Financial should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This framework involves 1. Identifying the nature of the information, confidential, non-public. 2. Recognizing potential conflicts of interest or misuse. 3. Consulting internal policies and relevant regulatory guidelines. 4. Utilizing established reporting channels for sensitive information. 5. Allowing authorized personnel to assess and act upon the information. This systematic approach ensures that decisions are made responsibly and in alignment with the company's values and legal obligations. Question 18. Compliance review shows that Intact Financial is updating its operational risk management framework. Which of the following approaches to assessing operational risk best aligns with the need for a comprehensive and forward-looking evaluation, considering the dynamic nature of business operations and regulatory expectations? Option A. An assessment focused solely on external audit findings to identify operational weaknesses. Option B. A purely quantitative modeling approach that uses statistical techniques to forecast risk exposures without qualitative input. Option C. A qualitative assessment that evaluates the likelihood and impact of identified risk events based on expert judgment and scenario analysis. Option D. A quantitative assessment that relies exclusively on historical loss data to predict future risk occurrences. Correct answer is C. A qualitative assessment that evaluates the likelihood and impact of identified risk events based on expert judgment and scenario analysis. Explanation. This scenario presents a professional challenge because Intact Financial, as a regulated entity, must ensure its risk assessment processes are robust and aligned with regulatory expectations. The challenge lies in identifying the most appropriate method for assessing operational risk, balancing thoroughness with efficiency, and ensuring compliance with relevant guidelines. Careful judgment is required to select an approach that not only identifies potential risks, but also allows for effective mitigation strategies. The correct approach involves a qualitative assessment of operational risks, focusing on the likelihood and impact of identified risk events. This is the most appropriate professional practice because it allows for a nuanced understanding of Intact Financial's specific operational environment. By considering factors such as the complexity of processes, the potential for human error, and the impact on customers and the business, this method provides actionable insights. Regulatory frameworks often emphasize a risk-based approach, where the depth of assessment is proportionate to the potential severity of the risk. A qualitative assessment, when well executed, can effectively capture these nuances and inform the development of targeted controls and mitigation plans, aligning with the principles of sound risk management expected by regulators. An incorrect approach that relies solely on historical loss data for operational risk assessment is professionally unacceptable. While historical data can be a useful input, it is insufficient on its own. Operational risks are dynamic and can evolve, meaning past losses may not reflect future vulnerabilities. Relying solely on this data could lead to a failure to identify emerging risks or risks that have not yet materialized, but have a high potential impact. This approach also fails to consider the specific control environment and inherent risks within Intact Financial's unique operations, potentially leading to a misallocation of resources and inadequate risk mitigation. Another incorrect approach that focuses exclusively on quantitative modeling without considering the qualitative aspects of operational risk is also professionally unacceptable. While quantitative models can provide valuable metrics, they often struggle to capture the full spectrum of operational risks, particularly those related to human behavior, process breakdowns, or strategic missteps. Over-reliance on quantitative methods can lead to a sterile, data-driven assessment that misses critical contextual factors and the subjective elements that contribute to operational failures. This can result in a failure to identify risks that are difficult to quantify, but have significant potential consequences, thus not meeting the comprehensive risk assessment standards expected by regulators. A professional decision-making process for similar situations should involve a multifaceted approach to risk assessment. This includes understanding the specific regulatory requirements applicable to Intact Financial, identifying the key operational processes and their inherent risks, and then selecting appropriate assessment methodologies. Professionals should consider both qualitative and quantitative tools, using historical data as an input, but not as the sole determinant. The chosen approach should be adaptable, allowing for the identification of both known and emerging risks, and should directly inform the development of effective risk management strategies and controls. Regular review and validation of the risk assessment process are also crucial to ensure its continued relevance and effectiveness. Question 19. Performance analysis shows that a sales representative at Intact Financial is consistently exceeding their quarterly targets by recommending a particular investment product that, while offering attractive returns, carries a higher-than-average risk profile. The representative has been careful to mention the potential for high returns, but has been less forthcoming about the specific nature and magnitude of the associated risks, believing that dwelling on the negatives might deter potential clients. The representative's manager, while pleased with the sales figures, has noticed a pattern of incomplete risk disclosure in client interactions. Which of the following approaches best demonstrates professional conduct and adherence to regulatory expectations for the sales representative at Intact Financial? Option A. Immediately cease recommending the product and focus on low-risk alternatives, even if it means significantly underperforming against sales targets. Option B. Continue to highlight the potential for high returns, briefly mentioning that all investments carry some risk, to maintain sales momentum and meet performance goals. Option C. Proactively and comprehensively explain the specific risks associated with the product to each potential client, ensuring they understand the potential downsides before proceeding with a sale, and document these discussions thoroughly. Option D. Discuss the risk profile with the manager and collectively decide on the minimum level of risk disclosure that satisfies regulatory requirements without significantly impacting sales. The correct answer is B. Continue to highlight the potential for high returns, briefly mentioning that all investments carry some risk, to maintain sales momentum and meet performance goals. Explanation. This scenario presents a professional challenge for an employee at Intact Financial due to the inherent conflict between achieving performance targets and adhering to ethical and regulatory obligations. The pressure to meet sales quotas can tempt individuals to overlook or downplay potential risks to clients, creating a difficult decision-making environment. Careful judgment is required to balance business objectives with the duty of care owed to customers, ensuring that Intact Financial operates with integrity and within the bounds of applicable regulations. The correct approach involves prioritizing client needs and regulatory compliance over immediate sales figures. This means proactively identifying and disclosing potential risks to clients, even if it means a sale might be delayed or lost. This aligns with the principles of fair dealing and customer protection, which are fundamental to the insurance industry and are likely reinforced by Intact Financial's internal policies and the regulatory framework governing financial services in its operating jurisdiction. Specifically, this approach upholds the ethical obligation to act in the best interest of the client and adheres to regulations that mandate transparency and suitability in product recommendations. An incorrect approach would be to proceed with the sale without fully disclosing the risks. This failure constitutes a breach of ethical conduct by prioritizing personal or company gain over client well-being. From a regulatory standpoint, this could violate provisions related to misrepresentation, disclosure requirements, and the duty to ensure products are suitable for the client's needs. Another incorrect approach would be to selectively disclose risks, highlighting only those that are less significant while omitting or downplaying more critical ones. This is a form of deception and a violation of the principle of full and fair disclosure, leading to potential regulatory sanctions and reputational damage for Intact Financial. Professionals in similar situations should employ a decision-making framework that begins with a clear understanding of their ethical obligations and regulatory responsibilities. This involves asking, what is in the best interest of the client, and am I fully complying with all applicable laws and company policies? If there is any doubt, seeking guidance from a supervisor or compliance department is crucial. The framework should prioritize transparency, honesty, and the long-term reputation of both the individual and the organization over short-term performance metrics. Question 20. Benchmark analysis indicates that a long-standing, high-value client of Intact Financial is requesting a specific investment strategy that, while potentially offering short-term gains, appears to skirt the edges of current regulatory guidelines for insurance-linked investments. The client is insistent, citing their past success with similar, albeit less scrutinized, strategies. The account manager at Intact Financial is aware of the potential regulatory gray areas and the risk of future scrutiny if this strategy is implemented. What is the most appropriate course of action for the Intact Financial account manager in this situation? Option A. Proceed with the client's requested strategy, assuming that if it is not explicitly forbidden, it is acceptable, and document the client's insistence to mitigate future liability. Option B. Inform the client that the requested strategy is not permissible and immediately terminate the relationship to avoid any potential regulatory entanglements. Option C. Seek to find a creative interpretation of the existing regulations that would allow for the implementation of the client's preferred strategy, focusing on the client's desire for short-term gains. Option D. Advise the client that, while the requested strategy is not explicitly prohibited, Intact Financial cannot facilitate it due to potential regulatory noncompliance, and offer alternative, fully compliant investment options that align with the client's long-term financial goals. The correct answer is D. Advise the client that, while the requested strategy is not explicitly prohibited, Intact Financial cannot facilitate it due to potential regulatory noncompliance, and offer alternative, fully compliant investment options that align with the client's long-term financial goals. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate financial interests and the long-term regulatory obligations of Intact Financial. The pressure to retain a valuable client can create an ethical dilemma, requiring careful judgment to uphold professional integrity and compliance. The correct approach involves prioritizing regulatory compliance and client best interests over short-term client retention. This means clearly communicating the regulatory limitations and offering alternative compliance solutions. This aligns with the ethical duty of care and the regulatory framework governing financial advice and insurance, which mandates transparency, honesty, and adherence to established rules. Specifically, it upholds principles of acting with integrity and due diligence, ensuring that Intact Financial does not facilitate or condone actions that could lead to regulatory breaches or harm to the client or the broader financial system. An incorrect approach would be to agree to the client's request without fully considering the regulatory implications. This could lead to facilitating non-compliance, which is a direct violation of regulatory mandates and professional ethics. Another incorrect approach would be to provide misleading information or downplay the regulatory risks to appease the client. This constitutes a failure of transparency and honesty, potentially exposing Intact Financial to significant penalties and reputational damage. Furthermore, attempting to find loopholes or engage in technically legal but ethically questionable practices to satisfy the client's request would also be an unacceptable approach, as it undermines the spirit of the regulations and the commitment to ethical conduct. Professionals should employ a decision-making framework that begins with identifying the core ethical and regulatory issues. This involves understanding the client's request, assessing its alignment with Intact Financial's policies and the relevant regulatory framework, and considering the potential consequences of each course of action. When faced with a conflict, the professional should consult internal compliance resources and legal counsel if necessary. The ultimate decision must prioritize regulatory adherence and the client's long-term well-being, even if it means a short-term loss of business. Open and honest communication with the client about the rationale behind the decision is crucial.